Time for the latest earnings outlook now with Research Director Shiraz Mian. So, in a nutshell, without getting into the aggregate numbers in too much detail, because by the time this video gets shown, those numbers will already be outdated.
That's right.
In a nutshell, weaker than expected Q3 earnings. However, as I kind of go through the trends, the news is not all bad. There is some smattering of good news out there, and we'll get to that good news, I promise you, in this conversation. But it seems to me that one of the biggest surprises so far this earnings season is the hits that are being felt by the tech sector, correct?
That's right. Yeah, tech was a standout growth leader for a very long time, and let's not forget that tech is the biggest sector in the S&P 500 in terms of market cap, earnings contribution. It's ahead of finance. So the tech weakness, the very pronounced tech weakness this time around is really being felt.
Any reasoning behind that?
It's a combination of factors. So we will get about a fifth of tech sector earnings later this afternoon when Apple reports, but about the 50% of the earnings reports that have come out, it's across the board weakness. Margins have peaked. Revenue gains are not coming along. So we saw that with Google, we saw that with IBM, we saw that with Microsoft, and it's a story that's across the board getting repeated. But we all felt that tech was somehow immune from these forces, but apparently they are not. So we are seeing the same forces that's bringing down earnings for everybody showing up in the tech sector as well.
Okay, and this afternoon, today, any of those references are referring to October the 25th when we're recording this. So the weakest sector overall, basic materials so far.
That's right, and that's the economically most sensitive one. So it's companies like DuPont, Dow Chemicals, the steel makers, and companies like that, and they are hit the hardest by the global economic slowdown that's going on in Europe, that's going on in China, and the kind of like subdued, subpar growth that we are seeing at home. And the growth numbers, the beat ratios, they are, and also the quality of the guidance. It's the weakest of all the 16 ZAC sectors in the S&P 500 in the basic material sector. Yeah.
Okay, so here's that good news that I was alluding to at the top. Best performers so far, financials, healthcare, and staples, right?
That's right. Yeah, financials have been very, very good. In fact, if you exclude Bank of America from the financials numbers, which had a major flip from very strong earnings in the third quarter of 2011 to a very weak number this time around, then we have double-digit earnings growth. The beat ratios, the surprises in the finance sector are also some of the best. In fact, the highest. More than 2/3 of finance companies have come ahead of expectations. The other two sectors you mentioned, they are also very good. And that's overall, you could say, a positive sign that there are some pockets of strength within the corporate sector, which is still in the earnings growth phase. I'll add construction, home builders to the story as well. Their numbers and outlook also look very good. So yes, I would agree with that.
Okay. It had been thought before the Q3 season got underway that companies with exposure to China and Europe would be the ones most likely to be reporting the negative earnings news. But we're also seeing some profit problems from companies with revenue slippage right here in the U.S., like McDonald's, for example.
Yeah, that's true, but partly only. I mean, let's not forget that McDonald's is the quintessential multinational.
Company.
That's right. And when they talked about the weakness in their numbers, they did flag Europe. They did flag the issues they are facing in the Asian market. We saw that with some of the other consumer-centric stocks as well, Yum Brands, for example. So the more domestic consumer-centric companies are actually not doing that bad. So like Coach, for example, its growth numbers in China didn't look that impressive, but its comps on the home front carried it over what the street was expecting it. So it's kind of a mixed bag, but overall, if the exposure is more domestic, then you're doing okay. If your exposure is more Europe, Asia, particularly China, then you're in trouble.
Okay. We're starting to see the Q4 warnings come in now.
That's right.
Are companies just warning in order to set the bar lower so they have an easier target to hit for themselves?
Well, that's been a recurring theme, and you put your finger on the exactly the weak spot, and in this whole earnings reporting charade, to put it that way. They set expectations so low that they easily beat them, but we are not seeing that trend get repeated this third quarter reporting season. I mean, typically 2/3 of the companies will come ahead of earnings expectations. About 60% of companies would beat revenue expectations, but it's way below those levels in the third quarter. So that narrative will probably need to be revisited. Are earnings really that weak? What we are seeing in the growth numbers and in the aggregate numbers, or management teams were taken by surprise by the slowdown as well. So to some extent, yes, they are bringing down expectations for the fourth quarter, but it's also a reflection of the reality. So the fourth quarter is already underway, and they see the weakness, and they're just making sure that the street expectations are properly anchored. And as we've been talking about here in the past as well, expectations for the fourth quarter were relatively on the elevated side.
Were very elevated.
That's right.
But you were a little skeptical about that.
That's right. Yeah, the expectations were for about 7% growth in the fourth quarter, and then close to 12% growth for the whole of 2013. And I've steadily been skeptical of that those expectations need to come down, and we are starting to see that happen right now.
Okay, we'll have to wait and see how that plays out. There's always so much to talk about here during earnings season with Shiraz. If you want to get updated day for day on the daily earnings trends picture, then go to the Ahead of Wall Street section on our homepage, Zacks.com, because that is where Shiraz actually gives all the little nuances and his analysis of those nuances during this third quarter earnings season on a daily basis. The bigger picture can be found in his written earnings trends piece, also accessible not only on our earnings homepage, but on our homepage as well at Zacks.com. With Shiraz, I'm Terry Ruffalo.